Okay, now let's try to understand dividend payout ratio. So dividend payout ratio is a important ratio which simply shows that what a dividend per share you are paying out of whatever earnings you have done. So if we go to our financials above and see our P&L, then we will get to know certain details about it. So our P&L is here, and within our P&L, if we see that our earnings per share was 56 cents and our dividend per share is 20 cents, which means that from out of 56 cents we are paying 20 cents as dividend, which means that this ratio among both of them will be reflecting our dividend per share ratio, or I can say DPS ratio. So let's go below and see where it was. Yeah, so our dividend per share was 20 cents and our earnings per share was 56 cents. That gives us 35.7%. What does this mean? This simply means that if we are earning $1, then out of $1 we are paying 35 cents to the investors. So out of your earnings, how much you are paying the dividend? And the numbers for this is like that. Now why this dividend payout ratio is used? So companies generally use this dividend payout ratio to identify if they are having high EPS and high earnings, then they may think that okay, we need to pay dividends to our customers, not the customers dividends to our stakeholders. Or if the companies also don't have much reinvestment opportunities, then they think that okay, we are having much cash in terms of higher earnings, so let's pay to our stakeholders. So this is dividend payout ratio.